Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday, making it a few minutes past 1100 UTC. A really big shout out to all of you watching this live today, as well as all of you that are watching it on recording. So, what do we have today? Well, first of all, it's Wednesday, so it's time for our alt and chart request show. So if you do have any tickers that you would like me to take a look at, please pop them in the comments and I will do my best to cover them all before the end of the show. So we've already got some requests that have come in. So let's make a quick note of what we've got so far. We've got Bitcoin, we've got Ethereum. We're going to take a look at Bitcoin and just kind of paint the scene, take a look at how that's kind of affecting the rest of the market. We want to take a look at Bitcoin dominance as well. You know, ultimately, we're looking for that kind of resurgence in the riskiest of risk assets, which are our altcoins, to see if there's any really good picks, anything that looks like it's really starting to bottom out, that if Bitcoin behaves and we get the continuation of this risk bid, we can really kind of step on the gas and try and pick out a few gems. So we're going to take a look at that. We're going to take a look at Solana as well. We're going to take a look at WLD, and I believe we also have AXGT sent to me by Cordian this morning. And there was one more. Let's take a look what we've got. Vertical AI, and I'm going to throw in a little bit of a StateX myself as well. Let's see. Because again, you know, we're holding some key levels with that, and I think there's some really good opportunities coming up that I'm certainly looking to take advantage of. So what else have we got to cover? Well, really importantly, we have got some really, really important news today. Gordon, good morning, Gordon, or good afternoon, wherever you are. MS MicroStrategy, yeah, sure. Take a look how that's ticking along, shall we? Okay, so before we do this, we are just going to pop over and take a look at the news. Now, we've got really important news, important news week this week, right? But today, we are looking at PPI. Now, if anybody remembers a few weeks ago, the PPI print that came in, you know, it was a long way off what they thought it was going to be. And the fears started to get a little bit realized that the tariffs are starting to take effect here. And actually, you know, a lot of the kind of stockpiling that companies managed to do in that grace period before these tariffs took effect, plus anything they obviously had in that period that weren't subject to tariffs, were able to be passed on to the consumer at the regular price, not impacting the business. Now, when the tariffs start to weigh in, the businesses have, you know, the producers such have two options in front of them. They can either wear the extra cost, which lowers their margin, ultimately hitting their bottom line, their profitability, or they pass it on to consumers and take the risk that you're going to get basically less people, right? Because the products have gone up. So that's where the balancing is coming. And now we saw that big hit to PPI in the previous print. And now people are kind of saying, okay, is this really starting to fluster into CPI? Are the consumers starting to feel this? And the assumption is yes. However, we have to work on assumptions in trading. It's one of the few industries of this nature where we have to make all of our, you know, projections and plans without ever having a full set of information. But if we're looking at this, the other thing that's of note today is it's a rare week. You get one, maybe two in a year when PPI prints before CPI. Typically, the first one to print really sets the tone as the market holds an expectation that there will be obviously a follow-through effect on the other. Basically, both pointing to a similar thing. Ultimately, at some point, if you keep running PPI really, really hot, then that's going to flow through into CPI at some point as well. So we're going to take a look at that just to cover up the rest of the week, because obviously I won't be live with you tomorrow or Friday. We're coming into core CPI, CPI month on month, CPI year-on-year unemployment claims as well on Thursday and Friday. We're finishing off with preliminary UOM, consumer sentiment and inflation expectations. Okay, so as you can see, quite a turbulent news week ahead. Jojo, how are you doing, my friend? Good to have you with us. I was talking to Jojo yesterday. We saw actually that we had the Apple event yesterday, which Jojo made me aware of. It wasn't on my it wasn't really on my hit list or my watch list as stuff. It had managed to kind of slip the net. And what we can see, let me just take a look just on the right-hand side of the screen here. Apple, the only stock out of the Magnificent Seven, which is Apple, Microsoft, Amazon, Google, Meta, Nvidia, and Tesla, down on the day yesterday. I mean, Microsoft ran it pretty close as well. You know, Tesla was hardly up a great deal, but still holding well. But, you know, talk about the buy the rumor, sell the news type of event. This was basically, a buy the run up, sell the actual event. So whether the market basically had just been overpricing Apple for a while on the basis of, all this new tech coming out, the new phones, or whether there's a little hint of disappointment in the market in terms of what, excuse me, and what they're offering, that unfortunately that information is beyond me, but basically one of those things has happened. I think it's probably the earlier, when you see these massive kind of events, happens quite a lot in crypto as well. You get these mad run-ups to the actual event, and then the event ends up being a little bit of a nothing burger or a kind of sell-off because the market's already overextended itself into it. Then as it starts to reprice and normalize, you then see those kind of pullbacks. However, what we are seeing here is great stability here on Bitcoin. For anybody that isn't aware, yesterday the jobs numbers got repriced lower. So that shows an even softer labour market than we saw with the early prints. So, it's all pointing towards the Fed having to cut, right? And that's why the market is ultimately bullish overall. Now, we can see here, we will take a look at this as well. We've got the NASDAQ. We'll cover the volatility index as well. But we are going to start here on Bitcoin. So let me just make this a little bit larger. Take a little sip of tea as well. I'm coming down with some kind of British summer cold at the moment, which obviously for the 4 days of decent weather we've had makes sense. So I do apologize if I sound a little bit gruffly today. So here on Bitcoin, just looking at this on the daily. So we're just going to pop out to a weekly for a second, just to really strip away all the noise and just look at these beautiful higher highs, higher lows, higher highs. And ultimately, until proven otherwise, what is a higher low in here, right? So as we look at this and we're kind of working through it, I think we kind of say, okay, well, we're still holding bullish structure. Price has now retested this consolidation that led to price moving higher. All right, we took a nice sweep of liquidity here, saw a beautiful move finally back above the prior all-time high that was set all the way back here, all right, in January 2025. And now we're consolidating above this level. One really nice thing here on the weekly is that we did kind of have this big bearish candle that kind of flushed lower, and then we had this recovery back above this level. Now price is fighting with this, the all-time high that was set over here in May. So we can see what happened. Price broke out above this, got a beautiful retest of this. We were all jumping in long. I think a lot of people were at this point up into these highs. We did get stuck here a little bit, but then we did have that beautiful expansion. We then got that nasty inverse hammer or pin bar candle here, long upside wick showing nothing but absorption, showing that sellers were trying aggressively to short this here, and they beat the buyers basically right back down below this level here. So this was the level capping the market for me. Still makes sense that it is. All right, so we're here at about 119,471 on OKX. And now price is kind of just back in this range here. Yeah, price kind of got up into this level. We ping-ponged around here. Price got back up here. And now we're back in here. And I think that's ultimately quite a good thing. Certainly how I'm looking at the markets at the moment is there's limited upside for Bitcoin, right? However you look at it, even if this thing runs to 200K, right, it's not going to do, you're not going to be able to double your money. So ultimately it attracts a very different type of investor, a much longer term investor as well, which hopefully will be good for the asset moving forward. Also, if you look at the balance sheet that Bitcoin's finding its way onto now, as well as a number of other cryptocurrencies that are starting to either be integrated into reserves or long-term holding portfolios at large institutional or even governmental level. If we consider the current risk environment as well, we're looking at a Federal Reserve in the US that's, there's a little bit of turbulence going on there at the moment, but even Powell, who's had to fight Trump at every step, he's started to turn dovish here, meaning bullish, explaining that there probably will need to be further rate cuts. The market has basically completely priced in the fact that we're getting the rate cut now in September in the US. So we need to be careful about that when that happens, by the way, because I think the market's priced that in now. I think that's basically being taken as fact. So it could be one of those things where people expect, the 25 basis point cut comes in at the Fed announcement, and then, excuse me, all of a sudden the market doesn't rip like people think that it will, because the market kind of expects that. So the news ultimately becomes neutral or slightly bearish in a way sometimes, because the nature of how people are positioned. But quite often on those type of events, you see that little flush catches people offside, people panic sell, take the short side, and then what happens? You get the squeeze, the liquidity is generated, and the market pops back to the upside. Unless we get any really significant news. And then we have got new news items that we need to kind of be aware of. We had the situation in Qatar, Israel striking Hamas in Qatar, which is the first time I believe that's ever happened. That is, that has the potential to show for escalations. Obviously, there's the whole unrest in Gaza, the very sad situation that continues over there, the incredibly sad situation between Russia and Ukraine, the escalation of that. Looking now, I read some news this morning that there was drone activity over Poland. So, forget the markets and everything from a humanitarian perspective. Let's hope that lunatic over there doesn't get his way any further into Europe. But these are the kind of black swan events that we really kind of need to be looking out for. But ultimately, considering the amount of negative news that's hitting the media at the moment, the markets are actually holding up pretty well. When you look at something like Bitcoin, it's it certainly used to be one of the first things people would look to shed in terms of out of the portfolio if they think the markets are turning. The fact that people are really buying this up here shows you that there's still demand at these levels. And from a technical side, we're just looking to take that news and we're looking to kind of put it on the charts and say, okay, well, we're back above this, which was really key resistance through this area. The dotted line on the chart remains the same. The plan remains the same on a weekly scale. I want to see price back above this consolidation, right? Because if we look at this area here, this really is what's doing a great job of capping the upside. Yeah, we had this consolidation here that led to price selling off. Now, on a longer term view, if I was an investor that was long here, there's a chance I've held through this drawdown. And with price coming back here, it then gives me the opportunity to shed the position, to get rid of it, to get out of break even or as minimal loss as possible and reconsider. Excuse me. The fact that people are buying in this area, we managed to come in, setting a higher low here, pushing to set this higher high, is showing me that the buyers are making headway here in an area that sellers should be very, very prominent and ultimately in control of. So moves above this area, especially strong impulse moves above this area to retraces to here, is the move that I'm really looking for in terms of getting long here on Bitcoin. All right. I don't really need to drop this off in any other capacity because the daily is just so very clean here. And ultimately, you can just see, by these upside wicks here, that you've got a key point of resistance. So in terms of looking at the 4-hour plan, let's get these session breaks off for a minute. Right, in terms of looking at our 4-hour plan here, we can see the resistance, right? And you can see the support in here as well. We look along this line. If we take the lows of this line, start engaging with some of these, yeah? So we're just going to draw it on the base of this line here, draw it across and just say to ourselves, okay, well, let's get rid of that for a moment and say, okay, well, if we wanted a lower time frame level, I would still want daily confirmation here, right? But look, support, so resistance, clean break above, retested, support, lovely move off of that price. Then look how it comes into this area here, wicks below it, but then look when we actually close below it here, right, on this candle. Look at the difference here, how price is just wicking in, finding buyers, wicking in, finding buyers. Those buyers then get exhausted here and the sellers take over. We close below. Look at the retest then of this area. This is that kind of breaker level. This is the level that we're looking to come back above on the daily. So it makes sense that on the 4-hour, this obviously is the same level. We just have more data. We have more information. We have more candles. So what do we want to see, or what do I want to see? Well, ultimately, if we're looking at this chart, it's really easy to see that all this support through here, very quickly became resistance through here. Okay, so really simply, daily confirmation's ideal, but I want to see price get above this level here, yeah, and then start to really kind of on the lower time frame build some structure. That's then when we can look to get involved to push this higher. But it is a dangerous play without the benefit of the daily close, all right? Because as we all know, in 4 hours, with 4-hour candles, we could simply do this, all right? And then the daily body closes back under here, all right? Forgive the exceptional drawing, but that's what you need to be cautious with, okay? So depending on your time frame, what you're using as your bias. For me, I'm looking for that daily confirmation price to come up, close back above this level here, and then I think we can really have a good run on these highs. What I really want to see from Bitcoin, though, is for it to just chill out and consolidate in this area here, because that's what's going to then play in to alts being able to have some upside. Lucherino, good morning, mate. How are we doing? Jojo, Asia's still making new highs. Yeah, really interesting. Do you mean the Sanyang? So I really like the emerging markets bid at the moment. I mean, I like it anyway, but some of the smartest people I know in the space, people like Macro Alf and Brent Donnelly and stuff like that, have had some brilliant conversations I've been party to recently, talking about the idea that the emerging markets is a good bid at the moment. A little bit kind of like looking at your risk on currencies, all right? That's why I like looking at the the Aussie and the New Zealand dollar. But yeah, agreed. Asia looking really, really strong at the moment, especially with that AI bid coming in, Alibaba, stuff like that, that kind of emerging news. The US, however you kind of look at it, possibly, ultimately these markets can just go like a freight train for a long, long time, but it doesn't stop the problem of, excessive debt to GDP, doesn't stop the threat of inflation going up or stagflation. And ultimately then it becomes about growth and the jobs numbers. Taiwan and Singapore indices doing incredibly well. We've got the kind of, you've got the chip narrative coming through as well. You've got the semiconductors, bits and pieces like that are all making the markets very interesting at the moment. Grivaldo Aldo, hello, mate. How are you doing? Do you think the cycle will end this year or will look to extend as the Fed look likely will take multiple cuts into next year? This is a great question, right? So let me bring up the NASDAQ chart. You're going to have to forgive me because I don't really cover it a lot on here. So it's probably covered in TA. Oh, actually, this really isn't too bad, right? This really isn't too bad at all. So looking at this, I'm just going to pop my moving averages on. All right. So looking at this here, and just forgive the green lines at the moment, it's just context for some testing that we're doing. But this is super, super bullish, right? In fact, if we just do this, leave the moving averages on, we can see this thing is just in an absolute monster of an uptrend. If we go here onto the weekly as well, all right, we've got this absolute cracking uptrend. Price tried to get back down here. This is the 20 period, this is the 50, this is the 100, all right, period moving averages. And what we want to see typically from strong trending assets, and for me, especially if they're in traditional markets, is seeing these all align. So you want to focus on these areas where you get the crossover, the shortest moving average on top, so the 20 crosses above the 50, and then the 100 in support underneath. When these start to fan out, you see how you start to get this space. The trend is really starting to breathe. It's moving to the upside. And then what you're looking at the 50 here, right? You're looking for reactions at the 50, which is the red. So see how we come into this level and we don't get any bullish reactions. There's no engulfing candles, there's no pin bars, right? We get some long downside wicks, but also long upside wicks showing us absorption. Pricing quickly makes its way back down to this level. So what we then want to see, we want to see the moving averages then get themselves back into order. Here's the cross. Then when we see the test of the 50, which is the red one, bullish engulfing, or a pin bar candle like this, yeah, then that's really an awesome cue to kind of move forward. If you have that higher high, higher low, look for the 20 MA. If not, I'm a bigger fan of waiting for these kind of retests further up. We have a strong purge below, but look how the moving averages stay in order here. They're obviously a lagging indicator, right? So you start to see these dips emerge a bit lower, but they do straighten out as price continues, showing us in a very simple way the strength of the trend. Now, something else I learned the other day, actually, and you're always learning new information in this industry, is how important the 55 period moving average can be for the NASDAQ, right, on the hourly. So let me just get rid of this for a moment. The reason I'm looking at this is that gives me my high time frame view. And basically what we can say here is this thing is just giga bullish, right? So this is going to come back and play into where we're looking at the Fed outlook. So I'm going to just pop the question away for a second, Grivaldo. So some people I know watching this on Twitter, that will probably be dominating the screen. But for anybody that maybe is just joining, Grivaldo just asked a really good question here, which is, do you think the cycle will end this year or will it extend as the Fed look likely to make multiple cuts into next year? Now, there's a few different things that we need to look at here, right? Ultimately, at the moment, the market, I think, is very, very focused on 2025. So the amount of rate cuts we're going to get this year, that was brought into question. Now it's looking like there will be more. People are even talking about a possibility of a 50 basis point cut in the next Fed cut, right? And here in September. I think that's a bit aggressive. Personally, if you look at the data, I don't think they need to be that aggressive with it. You've also got Trump's kind of maybe made a rod for his own back here as well a little bit, because he has been overly aggressive towards Powell about cutting. So Powell has every right to kind of sit back on his hands a little bit here and go, okay, well, you know what? If we don't really need to do it, I'm certainly not going to give that guy any more kudos than he deserves. But ultimately, I don't think the data really points that yet. Yes, we saw the non-farm jobs number come in really, really low. We've got concerns over PPI. Today and tomorrow are really going to set the tone here, because we have another bad PPI print. And if CPI tanks, then yeah, it's just going to be really interesting. But I still think the likelihood for a 50 basis point cut is still very slim. However, the likelihood for more cuts in 2025 are very much on the ball. What I would be looking at for the continuation of this market in 2026, and I think I was one of the first people to really kind of voice this actually, which was looking for the markets to start calming down into September, October, maybe towards the end of the year. But ultimately to either find resurgence in Q4 heading into Q1, because when you think about it, next year, the US needs to factor a lot of debt, trillions in debt on the balance sheet, right? And for that, they need to get they need to get bond yields down a little bit here. They need to kind of be thinking of different ways. And I think that could lead us into the end of the year. I think it's very, very likely we see quantitative easing from the US, right? So I think if we see any form of QE, then the markets are going to ultimately explode. The biggest thing for me, though, is the fact that Powell resigns, or Powell is stepping down in May, which is the end of his natural term. Trump has recently, with the whole situation with Lisa Cook, I don't know if you're aware of that, but basically he's fired somebody for, some really minor discretionary issues. So he can put his own person in and have a controlling vote for the Federal Reserve. Ultimately, he's a gigaball, so he's super, super dovish, which means basically the same thing. And his 3 picks are also quite, pro rate cuts, or at least relatively pro Trump, right? So if you get a Trump advocate at the head of the Federal Reserve, then these markets can really go. But the problem with that is that's going to ramp up inflation, and the problem with inflation is the Fed are just going to have to act. You can't go cutting into an inflationary environment. It just doesn't make sense. So the big question is, it looks like they basically want to run this as hot as they can until it blows up. And that's the big question, is when does this really sour? Or do we go into a stagflationary kind of environment? Things just kind of trickle along. But I think at that point, people are looking at earnings, people are looking at company valuations, feeling that, a lot of stuff is ultimately overvalued. And that's when we see those kind of market corrections. So personally, I think the likelihood of a bullish 2026, the early stages anyway, I think are relatively good. I know a lot of people, but people I respect greatly, people like Adrian, Crypto Bird, for example, who, is really looking to make sure that he's out of crypto by the end of 2025. I think, he bases his information that, he's got a very, very, very great and deep market knowledge as well. But we all have different opinions. But if you look at the seasonality side of things, we look at the point and the stage of the cycle we're in, you can understand the arguments for both sides. But personally, I do think we're going to see some bullish price action in 2026. And, if the data that washes through, so Jojo, just in your comment, problem is inflation expectations. Yeah, exactly. And things can change really, really quickly. So, the goal for the Fed really is kind of appeasing Trump's want for bullishness. That's if he gets his own kind of candidate into the Fed. Then balancing the fact that they're running really, really hot, trying not to get an uptick in inflation, still processing the tariff impact on the country, keeping obviously inflation under wraps is the key thing. But then all of a sudden you start looking at growth. So, they still want a good growth picture here. And if that really starts to dent as well, then there could be issues. So I think it's very, very difficult at the moment. I have the absolute joy of speaking to some of the really greatest minds that I have ever known in this market about it. And people are really kind of have a lot of differences of opinion here, which I think is always a very healthy thing. Right, let me take a sip of tea, and then I'm going to show you this very quickly on the NASDAQ, and we're going to rip through our crypto list. Right, there's more of a guzzle than a sip. So, let me turn this off quickly. There we go. So, the 55 MA, which we're just going to change this to here. Jeez, it's been testing so many of these recently. What do I need to get rid of? Probably this. Let's move this to a 55. So a lot of students recently and other people, some people kind of reached out. A lot of kind of really good conversations I've had with people recently about market structure and how to know if you're bullish, how to know if you are bearish, right? Now, ultimately, there's a lot of different ways and a lot of different things that you can use, market structure being the key. But something I find really interesting that's helped a lot of people, I got a lot of really positive feedback about recently, is this. Is, you know, someone like myself who focuses on intraday trading, especially, the 55 period moving average on the NASDAQ is a really, really good ally. All right. It's probably one of, if not the most reliable single moving average indicator, right? Now you could, you know, if you wanted to as well, you could add an EMA, which is our exponential moving average, all right, because that's an SMA. So a simple moving average. They just move slightly different in terms of speed. Let's get rid of that. And you could put this on the same. Right. And you could even add them together like that if you want, forming more of a band, right? And the idea is, just going to get rid of that. I mean, I don't like doing it this way personally, just because it's seems a little bit less clean. But ultimately, if you're trading above this, yeah, then when price is pulling back to these, you've often got a really nice corrective move to get back in. Strong expansion above. This one comes back, right? There's a great day trade in there. These things often tag in within the New York trading session here, all right? Price comes in, pushes up. Then it gets back down below, right? Now, you still retain structure here. So then look what happens. You get back above it here. Nice retest here. Nice price action through here. Again, looking for those expansions above. If you look at the moving average here as it starts to turn, yeah, as it starts to flatten out, we can see over here, price gets underneath and then you just start to see it get heavy. And then these pullbacks here, all right, often as well, if you add like a Fibonacci to this, yeah, beautiful here, right between the golden pocket and the 786, looking basically for those retraces, those pulls back. Price often doesn't like to get too far away from the average, right? When you see these extreme drops, you often get these pullbacks. And it really does help you to stop, you know, throwing yourself into these really, really, really kind of big FOMO moves. Yeah, now don't get me wrong, you can see by the chart here, this was actually shorted. But it's, you know, it's a really, really clean principle to look at. You then overlay your kind of market structure and bits and pieces like that, and then you've got a really, really powerful ally. And I'd recommend as well, you know, going in, testing it on the higher time frames, right? Getting here on the daily, you know, price being back below here got us and kept us into some really nice trend moves. And the reason that this is prominent here is we can see again, we're still really holding this, and what a nice buying opportunity this recent pullback was here. So if the NASDAQ is bullish, if we're seeing money run through equity markets, risk assets are doing well, that's when we assume and we take that data and we say, okay, the landscape here is probably going to be pretty good for Bitcoin, right? You can always check this as well if you're on a chart, yeah, and then you want to check another asset against it. I think sometimes the cleanest way to do it is first of all move this to a line chart, and then go on here, go to the plus symbol next to whatever the ticker is that you're trading, and then you can add on here. So I've already got it, for example. I can add Bitcoin, I can add Ethereum. I like to add it to a new price scale, which just kind of overlays it over the top, right? And then you can see here, let me just... there we go. If I remove that, and then we get rid of this. Here you go. Now you've got the track of this. Look how closely they engage with one another, right? You can see here, not so worried about the fact that they start to get a little bit further apart, yeah, but look at the moves. price heading down here, price heading down here, up here, down here, up. You see how they move and flux, not identically, right? We can see here on the NASDAQ's held a lot more strength through here recently, right? Ultimately, you know, market shocks and that are felt by the more beta of the risk assets, all right? So we can see that we've had that here, but ultimately overall, look how well this has done, you know, keeping you in track with risk assets. So that's why we have, you know, or why I have such a great interest in making sure I monitor the NASDAQ at all times as well. Right, so we've covered that. Now we're just going to spend the last part of the show. We're going to absolutely rip through some altcoins. We're going to cover Ethereum. Actually, we're going to take a look at Bitcoin dominance first. Sets a kind of nice page here. We still haven't managed to get below the 57.71 level, just a level that's of great interest to me. Let's move the MA off for a moment. But, you know, ultimately, we're just going to extend this across because that's a point we're going to be really interested in when price eventually gets back up there. But price is coming back down now. This is what we want to see in terms of seeing some life in the altcoins, all right? Again, if you look at something like this, for example, and then you put Ethereum on there. Yeah. Bitcoin dominance going up, showing Bitcoin. Basically, think of it like this. Think of it. There's a finite pool of resources. Think of it as a buffet, right? And when Bitcoin goes into full, you know, engorgement mode and just starts destroying this buffet, poor old Ethereum, there's no food. So Ethereum just getting weaker and weaker and weaker, right? Then when you start to see weakness here, which I don't know if you can see that, it seems like the smallest little pullback here, but look at the reaction here from ETH. This was the real kind of resurgent point. That was the point when we saw alts were starting to mean business. But if we look at where the real breakdown started to happen here, this is the point which we lost the support. We got back underneath it. And then look at this. Price consistently coming down here on Bitcoin. And look what happened to Ethereum. So that's why, for anybody maybe that doesn't know, why that's really, really interesting. Gigi, good morning or evening to you as well, amigo. So that's why that's good to look at. So ultimately, if you want your alt to do well, you just want to see this remain suppressed. And you also want to see it continuing to drop down. I really want to kind of see it coming into these levels down here as well. Again, only 56%, but it really does make a difference. Really want to see weakness in this to see the life get breathed life to be breathed into riskier assets like altcoins. All right. So if we take a look at Ethereum, this has just been stuck here for what feels like forever, right? So this was a really interesting level for me here, just because we had a local pivot. Price is kind of still underneath it here. We've just deviated twice, got back underneath. We're kind of stuck here now, but it's very, very messy. Nick, hello, mate. How you doing? Long time. So look, the reason for this level here was a local kind of level. This is only on a 4-hour chart, right? We saw resistance through here, strong expansion, found support, broke down, resistance. Again, a strong move through it, support, all the way through here. This was the deviation. I thought this pop here was going to be us holding this level and moving higher. We didn't get it. Then just look how price is kind of stuck to this now, almost like kind of a point of control. ETH is just going nowhere on the lower time frames here. You know, on the daily, we can see price ultimately just stuck in this range. I think we might be able to get away with doing this. No. But okay, if we take a look at this here, we can see from a volume perspective, we had this expansion here, price came back down. Now, might not look like the cleanest because we've had a secondary expansion here, right, which has taken us above. But ultimately, if I was drawing this as a hard drawn range, I would look at it as something like this. Let me just do this in a really bright color so it stands out. Yeah, and something like that as the lows. So we've also got a volume high here, value area high, value area low. Price is just kind of stuck in this range. And look how it's just obsessed by the point of control at the moment. That's this thick red line. Now, the reason is it's not a magic red line that price sticks to. It's showing you where the highest volume of trading has taken place, right? And you can see as prices kind of come through here, failure to get outside the value area low, right? But also to break out from the value area high. The information that we've got in here is price is just kind of range bound. It's really, really difficult to take those trades when price is at those kind of levels. So what I want to do is take a look at this in terms of the weekly. to just remind ourselves exactly how giga bullish this is. This was the key level for us here on the weekly. We broke out above that, retested it. Beautiful buys off of there, but we have ultimately rejected here at the highs. So price now coming back down to this level. Yeah, it looks entirely healthy, doesn't it, when you see, you know, this huge run up here. So I am looking at this level. I'm looking at this level as well here at 4109.56, which is on OKX. Remember, check the exchange that you trade with to make sure, because there'll be slight differences. Again, when we're trending, you know, we get this breakout and we broke out from this consolidation. We're just looking for these down close candles here. These are the consolidations. This is when price is cooling off, where it's finding, you know, or coming to the point of whether this is acceptance or whether this is considered value at this level, right? And then the auction starts again, drives price up, and now it's asking that secondary question here, which is tapped right down below the major high. All right, so with ETH, I think it looks fine here. It looks awful on the 4 hour because it's just in this horrible tight consolidation. But look, we can at least see within here, right? You can see all these upside wicks. In fact, if we just draw a line across this highest one here, right? If I draw that a bit better. You know, for me, looking at that, I've got an absolutely pre-made breakout level and a breakdown level as well here, right? So let's get rid of this for a minute. Actually, just to hide that because we want for any of the students to run through, right? And then let's clear this up because there's no point just having all this old stuff on the chart. We've been through all this. Let's give ourselves a nice, clear, forward-running space, all right? So price is in this range here on ETH on a daily scale. So we want to see a nice breakout of this and a retest, or want to see price run the lows again and come back up and then really make a move on that in terms of a 4 hour. I mean, this is a little bit messy here. I would say this is probably the point of consolidation here. If we're looking at this one, Imran as well. Oh man, when I miss Imran coming in. Hey Imran, how you doing, mate? Good to see you. You know, looking at this, so looking at the value area low, value area high here, we can see price again just kind of trapped in this ever compressing range. So in truth, I think, you know, on a daily scale, that's really, really clean. On a 4 hour, I think a nice kind of move to see is we've got a lot of liquidity built up under here, right? So I think something like this would be excellent. Yeah. So seeing price run out the lows, we get the deviation, price steps in here, we get the structural shift, and then you're in buy the dip mode. Yeah, on the lower time frames, trading it up here to the range highs. I'll leave that on there. And then we'll take a look to see next week what we've got kind of playing out. All right, let's run through that then. So we've gone through, we've done Bitcoin, Ethereum, Bitcoin dominance. Let's take a look at Solana. We can see the plan that we're waiting for here on Solana. It's grinding its way forward, which is nice. It's worked for us so far, level to level, buying the yellow boxes after the breakouts. We can see down here from previous weeks what we're looking for. We're looking for these areas of consolidation or for price to hold above here. These yellow boxes here, right, which is, if I've kind of done it a bit twattish because I've kept the boxes the same color as the breaker candles, but this is the breaker candle in here. We got the close above that, the retest of that. Beautiful, up into these areas here, mitigating here. I actually stepped away from Solana completely in here, and I'm now waiting for price to establish itself back above here. We can see the plan by the blue arrow here. Price has been grinding up really nicely, but ultimately this consolidation here led to a strong rejection here, and here. Again here, price is just nibbling away. Think of it as this gigantic kind of sell wall, right? You know, you just got it every time price goes in. There's so much overhead supply. It gets filled so quickly, and ultimately the buyers just aren't having enough fuel or ammunition, however you want to think about it, to break through this area. Then when they do, you got to ask the question of, okay, do they then have the strength to hold it? So much strength is getting expelled, you know, breaking these areas. Look at this one, was a great example down here, right? Strong resistance, came above, just managed to hold this here, managed to hold it here, but all the effort that went into that pump as it got back down to this level, those buyers had gone, broke down, retest, sell off, retest, sell off, retest, sell off, retest, sell off, broke above it here, swept straight back down where there was no strength at all, just to retest this consolidation. This caught a lot of people offside. I was looking to short Solana around here on the retest. Price got back above here, And that brings us pretty much fairly up to date with what we were talking about, looking at this being the setup here and this being the buy zone, which is what we're looking for a repeat of back above here. So that's all I'm really looking for here on Sol. We still don't have that daily close. Looks like we might get it today. And if we do, again, just want to see this area hold here. Yeah. So if this was, you know, the real consolidation in here, we can see this in this box. We've closed above that now. Closing above the yellow box here as well. Pullbacks to this area for me are absolutely for buying. Let's look at this beast then, shall we? I know we've had some people come in and ask about this. Oh, thank you, Imran. Much love back to you, my friend. I mean, we've been looking at this for a while, right? But there's a lot of very positive fundamental news around this at the moment. Our wonderful head of fundamentals, our FA lead guy, KZM, has had us on this for a while, right? Especially in and around these lows here, right? So again, look, this kind of area, this consolidation, and something I like to look for personally is when I see this support, support and resistance lines, levels, absolutely to kind of draw them in. Hey, Deepak, how you doing, mate? Hopefully covering some of these today for Deepak as well. He wants to see some, I saw your message recently, Deepak, saying we should look at some potential good setups for some alts that have bottomed out. So if you've got any suggestions, do let me know. We're going to look at AXGT, Vert AI, Estate X as well, which I think there's some really good potential in. We have covered Solana, but again, we're waiting for that breakout confirmation on Solana. So now we're looking here. This has obviously had a massive run off of news. Okay, so almost impossible to kind of get into these things here. But in terms of a level, why this became really good to buy, well, even if you only had this information here, right? But you can quite clearly see, look for these large moves away from an area. Yeah, it's a large move away from that area. Then look at where you see larger moves starting to materialize above. Then when this area again seems to hold price, we can put a support resistance level here. Yeah, something like that, which is okay. You know, ultimately, I do prefer drawing these as boxes. I would look at something more in the lines of this. First of all, because of this low coming into play, we see the close, the retest here. But then there's obviously something down here as well, right? And this is why you'll often see a lot of traders utilizing levels, right? So utilizing that as like a box and saying, okay, bearish below this, bullish above it. Yeah, we get the deviation here, but we step back above, find support, deviation back above. However, what I like to do with these levels as well is kind of ask myself the question of where were the buyers and sellers in control of this, and where are those buyers or sellers that were in control overwhelmed, and then they had the opportunity to flip their buyers to get out of break even. So this for me, again, looking at this nice sell off to the lows here, we can clearly see buying taking place here. So we pop our line on, we go, okay. Buying taking place here, selling taking place here, buying taking place here, price suppressed below that, pops back above, buying happening. Can we find a mutual level that affects this all? So we've got this level here and this level here. We're between the two. And then we kind of look at this and go, okay, well, where were the people that were caught offside on this? Well, the buyers in here, yeah, this move higher, that was then flushed out of the market. When price returned here, they didn't sell. Anybody that held through that drawdown actually added to the position here, judging by this strong kind of breakout of these highs, and again here. So if I look at this, I can kind of go, okay, well, if I just kind of look at this area here, right, often gives us a really good indication, because look, buying strength going into this area was lost quickly, it was retested here. That makes this, a bearish breaker candle. All right, I'm going to just get all of that on there for a moment and draw that in red. So then drawing that across, we can see we've got some added confluence. We've got this move here before price sold off. Price then took that area out, came back to this area. So sellers that were offside here held and ultimately continued to sell here. They were then overwhelmed here. Those sellers were the ones that capitulated, because then the buyers stepped in. The sellers took out at break even, or people were stopped out. And when they came back down to this area, they see the strength and the emerging uptrend, and then people ultimately become buyers here. So you just ultimately, I keep saying ultimately today, you just buy this area until it fails, right? That's the kind of name of the game. The problem that you're going to have, as most people do, every trader does, is getting out of your own head to kind of, to tell yourself to just buy at the lows and ultimately sell at the highs. So What good is that? What I would do with strong expansions like this, I get my Fibonacci out from the low to the high, and then I'm monitoring these levels. I'm never going to buy a 236, not in my nature. Very, very aggressive traders might buy the 236 if you're in a very, very strong uptrend. Go back and look at the price action. Excuse me. So, when have we seen a really large expansion like this, which is almost certainly going to be off the back of news? Well, we saw this one here, and this really does look like a 236, all right? So when price came back into here, so if we look at this here, if we're drawing it down, we can see price came up here, we had the initial consolidation, right? So if we're looking at price action just to here, we can see the 236 held, we get the bullish pin bar candle, price pushes up, no problem. I don't like buying the 236, just too aggressive for me. Then when we get into this high here, yeah, we see the 236 isn't really respected anymore, right? So we keep drawing this across here. Then what do we get? We get the beautiful retest here, the 0.5 area. That's where I'm interested in being a buyer because I know I've got some decent risk to reward just trading it up into these highs. And then ultimately what we get, if price then breaks down, that's when we look to change tact. What I try to do, because a lot of people ask me this, and I think it's a really good question, how you draw one of these Fibonacci legs. Ultimately, it's up to you. The key is making sure you're consistent. However, I like to, if I want to draw a new leg, I like to see it take liquidity on both sides. So you see this here is swept out this low, and this move here is swept out these. Well, I would leave this Fibonacci here then, and I would then draw a new one from this leg, from the low to the higher. And then again, with here, if you're just looking at price action here, yeah, comes in, starts to find some support, breaks down, doesn't respect the 382, really doesn't respect the 0.5. You can even see how it becomes resistance underneath it after failing to materialize any kind of bullish reaction at the golden pocket. You can start to see the weakness in the trend as it starts to sell off, all right? And then again, obviously what you look for here is an area that's taking liquidity on both sides of the market, and then you draw your Fibonacci the other way. So with that in mind, and we go back to our current fib, I would just like to see price chill out here for a little while. We've got this, which is the high of this consolidation. If I'm looking down the line, do we have a kind of key SR here? I think we do. Something like this, I think. Right, if we get another line here. Hey, Burton, how you doing, buddy? Yeah, I think that's pretty good. If I was to draw that out as a box now, right, which is just encompassing this low across to here. I don't think that's too sad, right? So we can see support coming in through here. Again, look what happens. We blitz the level, get stuck underneath it, resistance, resistance. This was a little sneaky move. We confirm this as a deviation. Price closes underneath. We lose structure and break down. Small deviation here, quickly rejected. Price breaks down, and then look, no respect for this level at all. What I love about this more than anything, and genuinely had no idea I'd just done this, but you know, they say when you're finding confluence like this, it's probably not to be ignored. The golden pocket sits right over this level. I would be interested, because of the nature of this, if we continue to support the bullish conditions across risk markets, the 382 could potentially come into play here. But I would say that the 0.5 or the golden pocket on this are really going to be the key areas. I think you could see some early buyers get wiped out here, a bit more liquidity being generated on the way down, and then this being the key move higher. The caveat to this is, you know, any asset that's moving under fundamental or news drivers can move incredibly strong. So maybe the 236 does support it, but for me, I'm just not willing to take that side of it. I prefer to wait for projects to come back a little bit and not get trapped in these highs, and then ultimately have to buy a lot lower, or get stopped out. So with that in mind, we are going to move on now to Axon DAO, our friends at AXGT. Let me just make a note of this. Beautiful. Right. So I think was it this one? Yeah, here we are. Now, wonderful squiggles. So now we're at a very, very interesting point with this, because if you look back on the other shows, I was highlighting these as the key areas, right, for buying. And I've explained very clearly, we've been involved in this project for a long time, right? So here, 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 here on the deviation and the reclaim, I added some more. And I said, if we deviate this area here, this is going to be a really big opportunity, right? So let me just get that off there. That's still very relevant because look, we still didn't manage to get back above that. We can see here on the squiggles what we were looking for the breakout, right? Price to get back above. Again, look at this area. This bullish gap supported price really well. We lost it, inverted it, resistance, resistance, resistance. Let's see this area get reclaimed before really smashing up into the highs. This beast down here is what's currently trapping price, all right? And all we've done is extrapolate this area as an area of interest based on this consolidation, right? And that's really from this high all the way down. This was a really beautiful level for buyers moving forward, right? We got some great trades off of this. Like I've said, with these that we're coming on to now, things like Axon Dow, things like Vert, Estate X, which, you know, is my kind of personal favorite. I'm just looking to add these as it's going lower. All right. So, I have a wonderful fundamental team. Love the fundamental report on these guys. Love the teams behind them as well. The narratives as well obviously suit very, very well for the market conditions. If there's assets that are going to run, then these are the ones that I'm really looking at. Now, we can see what happened when price got back down below this level, kind of ground down. These type of moves, are people shedding their positions, people kind of selling off, bleeding out as the market's going lower. And very, very often you see people step in, buy that up. This is telling me that this is a really key level down here. This is where buyers have been willing to step in aggressively. If we move backwards, we can see it's this inefficiency below here, but price coming back into the consolidation here. What I want to see is this area here continue to hold, and then I think this is the base after the deviation that price is going to use to move higher. We've got some overhead levels through here, absolutely, but I tell you this right now, and let's just extend that across there. Look how key that was. Yeah, support all the way through here, but you just look at these subtle little points of rejection. When price gets back above this level here, I think we carve through this quite quickly. So again, it's not financial advice. I just think this is good buying opportunity for all the buys that I put in down here. Now, remember, the buys back here as well. I'm just averaging my price in lower here. All right. So as soon as we got back in here, I've added some more. I have added a little bit higher because we did see the large expansion come into here. I wanted to add within this area. We did come back above this area here as well. So for me, that was a really, really nice opportunity. Now I think we can probably get rid of this lower green line now. It was just to signify the high of the bodies here. See, for this breakout. And then as we kind of came back into it, we're looking to say, okay, what kind of prominence does it still have? And you don't really see these particularly clean reactions. We saw this one where it got back above. Here we got a little bit of the same, but it's a little bit messy around here, to be honest. So if it doesn't make sense and it isn't extremely clean, then it's probably better to not have it on there as a distraction. So I think good buys here. We get back above this level here, and I think we can really, really start to run. So sip of tea, and then we're going to move on to vertical AI. Again, just remember when you're kind of investing in anything or what you're looking at, just kind of say to yourself, well, does it have the narrative? What is it looking like? So we're still holding within this range. Yeah, this is the area that I said that I wanted to see hold. Yeah, so was explained that on the breakout here, added here, we come back down this level here, explain that I would add again above here, which we didn't quite manage, right? It's the up close candle, looking for this to be the sweep on liquidity, this to be the breaker, price to come above, and then use that at the base. We haven't got that, but what we have done is deviate this level here, yeah, and now we're holding it. So this could be the little push up here. Yeah, I mean, I'd love to buy it back down here. I'm really sorry to everybody at Vert. I know you don't want to see all your hard work flushed out to a token price back down in the ones, but my God, would I look to add? Again, look, just look at these levels. Yeah, look at the pumps we've got off of these levels so far. So, I don't think we're coming back down to there in truth, but if we did, yeah, I'd be very, very interested here. Again, going to look to add some more when we get back above this level, close above this level, limit order here, and look to absolutely go. I think when we get back above this area here, yeah, so this was the deviation, breakdown, retest, sell off, reclaiming this area here and holding structure here. I think we make a move on these highs with no problem. ID IOTA, when IOTA? Well, let's take a look, mate. We'll make a bit of time. Come on, we got 4 minutes. We can do this, including IOTA, I think. So with Vert, I think it's a really simple daily plan here, right? So that's what I'm looking to do. I'm keeping this on the daily, all right? want to see price above here, then this ultimately just becomes a little consolidation above support. And then we can push up into these areas here. And again, then a breakout of this area here is when your moon bags are really, really going to start coming into play. Right, quick rundown of Estate X as well. You know, again, no secret, these guys are, you know, they're my favorite play in the market. I've been talking about it for quite some time now. Price is coming back down to this level. We're not quite there yet, but I'm really sorry, guys. I really hope we do get down to it. I thought this was probably going to be it. We've had some shaky news hit the market. There's been a few other factors as well that have led to this recent sell-off for risk, but we're still in we're still just in that environment where risk assets are thriving. Look at things like the NASDAQ, right? Look at all the bad news events that have come out that have barely really managed to rock the risk markets, right? I really do feel like these dips are for buying. But you know what? If I'm wrong, I'm wrong. It's just part and parcel of the nature of the business, which is why you have to have exceptional risk management skills. You know, to quote the great Larry Williams, multiple Robbins Cup winner, one of the greatest traders of anybody's generation, when they interviewed him and said he must be a once-in-a-lifetime trader, he said he's actually a very average trader. He said he knows much more talented traders, but he's an exceptional risk and money manager. So never forget that. Just always make sure you're in the game. You know, if you feel underexposed to a 10x winner that you just had, guess what? If you've managed to find a way to invest in that, you can do it again. But if you put all your money into that and that 10x winner turns into a loser and takes all of you with it, you don't have the capital to then invest again, right? So just be cautious with that. Right, so obviously, you know, big adder here. This was a very, very key area for me. The breakout of this was a huge buy. I'm going to buy more down here, right? And then again, when we get back above this level here, deviate this, step back above, and this goes. Look, they're offering tokenized access to property investment. It means that you can have a piece of genuine property investment as part of your portfolio, something that until now has only been reserved for the super wealthy, right? I come from a property development background as well. You know, it's one of the businesses that I built here in London, and I know how ripe the sector is for disruption, and I know how closed gated it is. These guys are opening this up for the world, and you can grab a slice of that. Believe me, this is going to be one of the biggest spaces in the world in the future. There's just no doubt about it, right? You look at how tokenization, the blockchain, everything can positively affect that. It's just, you know, for me, it just seems like a no-brainer. Anonymous Architect, still, you know, I think my absolute favorite GIF, that shark standing there on that. I absolutely love your logo, mate. Thank you very much. That's really kind. 67 coin. Do you know what the ticker is, mate? I've got about a minute, but I'm going to rip through these. But yeah, Estate X. I mean, come on. Just, I'm going to buy it here. I'm going to buy it back above here, and I'm just going to be holding this for a long time. But you know, please just dive in, do your own research on this. And I really do think you'll become as excited as I am about it. MicroStrategy, everybody's favorite Bitcoin lunatic. I mean, who doesn't love him, right? Who doesn't absolutely love him? So let's take a look at this. Don't know what's happened to that. We don't need that there anymore. On a weekly scale, let's just look, right? Look. Consolidations, expansions, consolidation, expansion, consolidation, expansion, consolidation, expansion, consolidation. Just a slightly larger one, I think. You know, we had this here. Breakdown of this trend line. Nice breakout through here. Yeah, I mean, I think ultimately looking at this here, and I do look at these on a higher time frame, and I typically with traditional market assets as well do favor using a moving average. So if I'm looking at this here, again, remember what I was saying earlier about these nice bullish reactions. Yeah, it would have been lovely if that was an outside day candle, but again, really, really nice close above the body here. Nice bullish pin bar here. You know, bullish reactions here at the 50 are what I'm looking for. We don't quite have that at the moment. We can see the 20 starting to curve back down here, but we just want to see that start to curve up. I think looking in here on a weekly scale, just want to see price trading back above these here. If we look at this very quickly on the daily. Willius, my friend, how you doing? Yeah, I'm really, really sorry, mate. It really isn't my area of expertise, but if you pop me a message, mate, I will certainly ask the team to make sure. I just wouldn't want to misinform you. I don't like talking about anything like that I'm not really, really fully educated on. So, I mean, yeah, a degen as I go, I just buy it anywhere I can get hold of it. But you want to make sure you're buying it in the best and safest way. So drop me a message, mate. I'll find out how that is, and would be happy to advise you on that. Kind of as it stands, it depends who you've kind of got access to and bits and pieces as well, right? But I got, you know, you can see on here mine were through Mexi, which can have some liquidity issues and that, but ultimately there's a few different ways it's available. I think they've got them all outlined on the site, on their website as well, but do let me know and I'll find out if you can get that on Phantom. So here is really nice and simple. Again, it depends what your battle is here, but seeing this resurgence here, I'd want to see price above the breaker line here, which is 341.62. Then we are going to start arguing with some moving averages, but I do think that once we get back above them, we're going to see that lagging thing and price is going to pull up. I'm a little bit cautious towards Bitcoin at the moment. It does feel like it's kind of topping out a little bit in truth. And I'm happy with that. Happy to see it sit there and consolidate in range. Maybe we get a run back at the highs. But I think, I would be a little bit cautious about investing in it here. On a weekly scale, seeing price close back above the 50 and this continuing to turn up and watching the uptick here on the 20, or ideally getting back above both, I think I would then be happy to trade it up into these highs over here. So very quickly, let's take a look at good old IOTA. Let's just get rid of these. Right, so where are we? Good Lord, we got a lot of old stuff on the chart here. Let's clean that up. Right, weekly. Yeah, holding the weekly gap here, which is this large area. Apart from that, not too much to write home about, really. On a daily scale, God, we can see this really kind of tight consolidation we've got in here. I would kind of be looking at this and saying that's probably a really good kind of trend line angle through here, I would think. But, again, one of those things, you want to get it on as many wicks as you can without violating the bodies. That's the best way I was ever kind of shown how to do it. So, yeah, okay, well, what lines up with this? Because, look, it's getting resistance all the way down here. Price currently seems to be getting support through this main area here, which we can allocate all of that to that order block there, or that point of demand. All right, so quite key, holding this point of demand. We've quite recently set this as well, which is the bullish breaker, up move on liquidity lower, price closes above. This is an area that should have offered rejection, now offering support, push up above that, and then ultimately looking for price to do something like this. I think this level here is a good one. Strong breakout here, hold that, yeah, and then we look for lower time frame sweeps of that level, recoveries of it to show sellers are trapped, buyers step in, and that's when we often see those large expansions. So that's what I'd be looking for there on IOTA. And yeah, really good heads up from Imran. We got PPI today, as we covered at the beginning of the show. PPI preceding CPI for one of the only times this year. Do keep an eye on that. The last print was very weak. If we see more weakness here, we could see a little bit of a shake to the market. All right, so that's what we're going to keep our eyes on. And just to cover it quickly, I really don't know what the ticker is. I imagine it's 67. Hang on. Because if you put numbers in on here, it's going to make you do the other way, isn't it? So it's going to be, there we go. Right, so 67 for our friend Stephen Levine. Right, Stephen, if something's trending, this looks like it is, I'm looking for these to support price all the way up, right? And we can see here we got that nice close above here. So while price comes into that area, it's quite a nice little area for price to come in, right? So look at how price reacted last time. This was the order block. You see the strong move above. You're then seeing the consolidation here in price before price pops, comes back down again, supporting the order blocks or the gaps. Price looks like it wants to drive down into this nice bullish gap here at the moment. So this gives us a nice opportunity here, aligned with the higher time frame order block as well, to look for some buyers in here. What I'd really like to see is price kind of sweep out this low here, yeah, close above this up close candle here, and this is where you get the opportunity to be a buyer. Yeah, seeing these consolidations swept out, reclaimed, basically sellers trapped. All right, and then buyers have a clear rein to trade it at least up into these highs. All right, guys. Marcus, thank you for the late message. Unfortunately, mate, we've got to close the screen. I do have a client waiting that I need to speak to, but the ETH has been covered at the beginning of the show, mate. So when this closes down, it will be available for you to watch on recording. And we cover it right towards the beginning, just after I stop going on about the news events that are coming up. All right, everyone, have a fantastic week ahead. Please do keep an eye on the news this week. We do have a turbulent end to the week. See PPI today, CPI tomorrow, and then your consumer sentiment closing off the week along with inflation expectations. All right, so trade safe, be good to one another, all right? And I think at the moment things look pretty decent for continuation. And the caveat to that is we don't want to see a really nasty PPI and CPI this week.